Executive of CIMB Group.
CIMB today reported a net profit of 1.22 billion ringgit for the first half of 2015. This is equivalent to an earnings per share of 14.4 cents. If you exclude exceptional expenses of 518 million ringgit, the group's business as usual or BAU first half 2015 net profit decreased by 17.7% year-on-year on the back of an 8.2% year-on-year growth in operating income. This is offset by increased provisions. So for comparative purposes, year-on-year performance is based on BAU numbers for the first half of this year. CIMB Group's first half operating income grew 8.2% year-on-year to 5.7 billion ringgit. The 6% year-on-year increase in operating expenses were largely due to higher personnel expenses from inflationary effects in Indonesia, so bringing about an 11.1% improvement in the group's pre-provision operating profit. Our group has always run various stress tests based on various scenarios, which includes the movement of ringgit, includes the movement of oil price, palm oil and other commodities. We have done the recent stress test as well, which covers the ringgit at various levels, and we are happy to say that at the group level we are very comfortable at the results at our liquidity and capital position based on the stress test that we have done. So we are not very concerned. We are not planning to revise the targets, both loan growth target and ROE target, but ROE target is going to be very challenged. So we think that it's going to be a difficult task to achieve that ROE target that we set out earlier, but we will still try to achieve that. Because like I said, we are on track in terms of our operating income and operating expenses, but what our concern is at what level will the provision be at, especially for Indonesia. For Indonesia, like I mentioned in my press release, we remain cautious, especially given the economic uncertainties or economic challenges in Indonesia. Thailand, we are a bit more positive in the second half, and Singapore as well. But we are on track in terms of our operating income as well as our costs. But what we need to be mindful of is our provisions level. We didn't let go two of our CEOs. Both of them actually resigned. For CIMB Islamic and CIMB Bank, we have started the process of looking for their replacements, and we hope to announce in due course who they are. The process is still ongoing, and the CIMB Islamic Bank CEO, hopefully we can finalize sooner than the CIMB Bank CEO. In terms of an impact to our business, the answer is no. As a bank, we are very much an institution, and we have people in place. Hands up,